SVB bailout, Signature Bank collapses, Bitcoin, short squeezing. Oh man, we've got a lot to get through. Oh man, what a 24 hours. Bitcoin back to 22,000 short squeezing. What does this mean for the markets? We've just had the bailout of SVB, Signature Bank, a heavy crypto bank as well, collapsing, but also bailed out by the US government. Has the money printer now been turned back on? What does this mean for the crypto market? We've also got Binance selling $1 billion of their stablecoin. What's going on? We're going to go into that as well. There's a lot to cover off. Smash the likes. Don't forget to subscribe. As always, check out the links in the description. Binance, one of our partners, links in the description, offering you some amazing bonuses using the link below. There is so much to cover off today. The first thing we need to cover off is this. This is the joint statement by Janet Yellen, Jerome Powell, and FDIC chairman. They came out in force on Sunday night to say we've got to deal with this. And this just reminds you how fragile the system in traditional finance is right now. Anybody who's just saying, oh, this is just a top 18 bank, no worries. They are not bailing out SVB for no reason. They are doing so because they know that this could risk the top set of banks in the US, and the contagion effect could be remarkable, not just in the US, but in Europe and the UK as well. They've gone ahead and said depositors will have access to all of their money starting from Monday, March 13th. That was today. It was really important that they did that, because if they didn't, there would have been a huge bank run today and any remaining assets would have got absolutely drenched. We are also announcing a similar systemic risk exception for Signature Bank, because Signature Bank was also taken control by the regulators. This is a big crypto bank as well, with a lot of connections to crypto companies and one of the important on-ramps into crypto. Shareholders and uncertain unsecured debt holders will not be protected. Now, there's a lot of that has been said about this, but not a lot of people are explaining exactly what is going on. So the way this is going to work is the US government is basically going to turn the facilities back on. They're basically going to turn the printer back on. And this is one of the reasons we're seeing the crypto market run right now. They're going to provide a $25 billion emergency fund. Now, in order to be able to provide that $25 billion, they're going to give $25 billion to the bank, and they're going to take the risky assets, the mortgage-backed assets, and any of the securities like US Treasury bills, which started the problem. Now, what the US government is going to do is they're going to say, oh, it's fine, we'll hold these to maturity, and eventually we'll get our money back. And now, of course, SVB, Signature Bank, these guys, they can't do that. People are running on the bank today, so they need cold, hard cash today. So in essence, if the taxpayer is not taking the hit, that means the US government has basically, in essence, turned on the money printer. So we know that technically, currently, they're going through quantitative tightening, which is where they're hoovering up money from the economy. So in essence, for this next year, they're not going to hoover up as much as we thought, because they're providing this facility to the banks so people can take their money out. Now, there's a few problems this could cause, right? And the first problem is this notion of moral hazard. Moral hazard is when you provide a precedent that it's okay to carry out risky practices. We're going to bail you out. It's okay. And we know Silicon Valley Bank were one of those banks which would do exactly that. They were the few banks that would provide serious lines of credit to tech startups who were taking huge risks and could go bankrupt, right? But also, it provides a precedent to the depositor, you and I, who may opt to go and put money in a regional bank, chasing yield, trying to chase a higher percentage. But why is it the bank's able to provide a higher percentage? Because they're taking on more risk. Now, this is one of the things that a lot of people are shouting for, that banks should not be bailed out for this very reason. Now, you can understand the argument, right? If you're a big bank in the top four, following more regulation, higher capital ratios, doing all the good stuff and not able to get that high yield, and then you look down the list and you see bank number 18 or 17, whatever SVB is right now, getting a bailout, you're going, hang on a second. They were taking the risk, getting paid for taking the risk, and now we're sat here with the government bailing them out? But we need to understand one thing. This is not a bailout of the bank. This is backstopping the depositors. And this is something a lot of people are glossing over today with this news. The bank is not being bailed out. Taxpayer money is not being used. Those shareholders, those investors, those people involved in the bank has collapsed. The depositors are going to be backed. And that's an important difference, and very different to the global financial crisis in 2008, where the investors were protected, the bank was protected, and still run as a going concern using taxpayer money. So what does this now mean for crypto? There's a few other things I do want to get into, but the first thing I need to show you is that Bitcoin has now squeezed its way all the way from 19,500 nicely up here to even getting to 22,800 here over the weekend. Insane movement here up towards midnight my time. Now getting a little bit of a calling off. This is important. It's got to hold this 22,000 level, hold it and move onwards. Now I'm going to share a few risk factors, but for now, This is a very good move. And the reason we're getting this move is markets have pivoted. They flip-flopped hugely. Look at this, guys. What are we looking at here? Have you noticed the difference? Because we've been looking at this chart every single day, and now nobody is pricing in 50 basis points. Nobody is pricing in that 50 basis point rate hike. 65% of the market is expecting 25 basis points. But what did I mention yesterday? I mentioned yesterday that this could set up the path for a surprise pause at the next meeting. Now look what we're seeing. 35% of the market is starting to agree with me. 35% of the market is saying, hang on, Jerome Powell might have to pause because he's broken things. If you look at the effective Fed funds rate, we were in, zero Fed funds rate basically for all this period of time. The pandemic happens and on we go to start hiking rates. Boom. And this is what we've just been through. One of the fastest, the fastest rate hike the US experienced in 40 years. And guess what? Markets are tapping out. Enough, Jerome Powell. Leave me alone. I tap out. I give up. We can't take it. We're breaking. Remember, we said one of the paths that could lead us to getting that ultimate pivot from the government is when they break something. Right? Because they're hiking, hoping that these numbers come down, non-farm payrolls, come on, soften labor market, inflation, come down, and then you just feel a judder. You feel a judder in the airplane. You go, you know what? I've just broken something. We've slowed down so far, so we've stalled. And that could be the reason that Jerome Powell is forced, his hand is forced into taking a pause because the systemic risks are just too huge at this point. Also, there's been an introduction of liquidity in the market. CZ says the following. He said, given the changes in stablecoins and banks, Binance will convert the remaining of the $1 billion industry recovery initiative funds. Remember, he created this fund after the FTX collapse from BUSD to native crypto, including BTC, BNB, and ETH. Some fund movements will occur on chain, and then he shared the transactions. So he's put $1 billion into the market. But there's a more bigger point I want you guys to focus on. What did I say yesterday? A lot of people were asking me over the weekend as USDC was depegging, and it started to repeg. I'm going to show you that shortly. But they were asking me, what is the best stablecoin to be in? And what was my answer? My answer was that there's no ideal stablecoin out there in the market. Stablecoins are a necessary evil, just like exchanges are. No exchange is perfect, no bank is perfect, no stablecoin is perfect. They all have the elements of risk, but you need to use them as and when you need to, and you need to be getting out. What's risky behavior is sitting all your net worth in one stablecoin for a very long period of time, keeping all your net worth in one crypto exchange for a very long time, keeping one, traditional bank with all your funds in for a very long period of time. That is reckless. You need to use it to get into crypto and then get out of crypto. And you can see CZ is putting a vote of confidence in the native crypto himself, and he's basically saying and voting with his money to say, I'm not trusting where stablecoins are sitting right now. And guess what? He knows a lot more than you and I right now on what the mechanisms and what's going on in the background of many of these stablecoin companies. While we're on the topic of CZ, it's worth picking up that there's a lot of hypocrisy going on. If you remember when Binance were facing their bank run, traditional media were covering this a lot. CNBC, all the mainstream news channels, they were wrecking CZ and Binance, right? Saying they were risk practices. They were really trying to spread a lot of FUD. Now, at the time, you've got to understand, I don't mind that. If they want to dig into a company, if they want to take CZ off a pedestal and really dig into his financial reports and ask the hard questions, I'm all for that. I'm going to do the same. But what I don't like is that when the opposite happens, when it's Silicon Valley Bank. Where's the CEO of Silicon Valley Bank? Where are the interviews? Where are them digging in and telling us, publicly that they were selling shares? Why is the same accountability not being shown? But we know that. We've seen blatant hypocrisy that when there's an issue with crypto, oh, it's a scam, don't go into crypto. But when there's an issue with traditional finance, like there's been hundreds and hundreds of bank failures over the years, guess what? They're just going to bail them out as if nothing happened. We'll forget about it. We'll move on. Right? But we wear our wounds on our chest, we carry on, and we lick our wounds and we keep it moving. No one's going to bail us out. We've learned that the hard way. Okay, so let's jump back into the charts here and let's bring out the EMA ribbon. You can see here on the 4-hourly chart, we've reclaimed our 4-hourly EMA ribbon. Fantastic. But if we look at the daily chart, this is where we've got a little bit of work to do. And it's very critical. You remember yesterday when I made the video, I said, guys, this EMA ribbon, if we continue to move to the downside, is going to flip. The lighter color lines are going to move over the darker color lines, and this could create a powerful move to the downside. So it's important we close above our EMA ribbon and keep the momentum going to the upside. That is very, very important. Now, the other way to look at that from a same perspective is we need to go and create higher highs. We need to get above these levels and start working our way out to get out of this downtrend. Another nice way to look at it is this upward rising channel. We've been following this channel for a while. We had our double top pattern. We predicted the fall to the downside, and you could see here that support is now coming in from the bottom area, and now we're working our way up. But you've got to be careful. And the reason I want you guys to be careful is look at this. This is the Fibonacci extension from swing low to swing all-time high. And what did I call out in my video? I said we could bounce to 0.382. We got the bounce perfectly there. You move up into your golden pocket, but you just have to make sure that the golden pocket doesn't act as resistance. We don't want to be doing that. Okay, so be very, very careful. Now, the fundamentals have now shifted in our favor. This is a beautiful U-turn. So where the technicals could show you that, I'm not as worried as I was just a couple of days ago. And the reason why is crypto does very well when the money printers are turned off, right? And if the US government has just shown that they're going to backstop these banks and the depositors, guess that's another form of printing, right? They're loosening monetary policy. They're helping the economy. Jerome Powell is going to be our friend again. Brilliant, we'll take that. And if you look at the dollar index, you're going to see exactly that. The traditional markets right now aren't very happy, right? Dollar index is falling 0.2. The US 10-year yield has come off significantly. We were just trying to go through 4% and stay above it. Now it's come back down to 3.5%. If you look at the pre-market, you can see that the pre-market is mixed. Okay, you got the Dow Jones falling slightly, of course, because of the bank contagion fears, S&P flat, and the NASDAQ, which is your risk-on stocks, are a little bit happy because they can see, oh, wait, maybe we're going to get a pause, right? Maybe we're going to get a pause. Maybe at least we're going to get 25 base points. We can roll out the 50 base points, which at one point we were pricing in. And that is why the cards now stack in our favor. But we're not completely out of the woods yet. And we need to stay very, very sensible and rational. You guys know what this channel is about. No sensationalism to the upside, no sensationalism to the downside. Just because we've had that move, it doesn't mean Bitcoin's going to go to 100,000. YouTubers will jump out and start making those videos that we're heading to 100,000. But we got to stay level-headed. It's a nice move. It's a good move here on the price action. But more importantly, I'm focused on the fundamentals. And the fundamentals are telling us that Jerome Powell and the Fed have started to break the system. And what that will now do is put pressure on him to loosen his monetary policy and start thinking about becoming accommodative again. That is good for risk on stocks. That is good for crypto. Guys, don't forget to smash the likes. Don't forget to subscribe as always. Check out the links in the description. And I'll see you in the next one.